Hello, everyone. Welcome to the Nemeth Report podcast. I'm Dr. Tammy Nemeth, energy historian, analyst, consultant, and I'll be your host. Today, I'm joined by Paul Tice to discuss his latest report for the National Center for Energy Analytics. And the title of the report is A Strategy for Financing the Nuclear Future. And you'll find a link in the description. Hi, Paul. Welcome to the program.
Hi, Tammy. Good to be with you. Thanks for having me back.
Yeah, it's so great to speak with you again, especially about this incredibly important subject, how to get nuclear power built on time and on budget. But before we dive into your report, I'm wondering if you can just take a moment to introduce yourself to our audience.
Sure. So, my background is I worked on Wall Street for 40 years. I called it a career about 3 years ago. The first thing I did was write a book about ESG because of, the influence that sustainability has had on the financial markets, which is to the negative, in my opinion. And then last year, I joined the National Center for Energy Analytics as a senior fellow, along with being a board advisor. And my background is in energy. I worked in sell-side research. I was an investor across the spectrum around the energy sector. So this allows me to continue my energy work. And it's a critical time for our country and the world, frankly, in terms of getting back to sound energy policy. And that's the goal of everything that we publish at the NCEA.
Yeah, and I'm going to put a link in the description as well for the National Center for Energy Analytics. Amazing work you guys do there. I highly recommend it to people to check it out and just scroll through and look at the reports, look at the blogs. There's amazing information there. In your report, before we kind of get into the weeds of it, I'm wondering if you can just say, what is the state of supply and demand in the United States right now? And what's the state of the various regional grids?
Well, the problem we have in the U.S., which is a European problem as well, is that we, over the last 10 years, have allowed way too much intermittent wind and solar into the grid. And we've kind of forgot that the gating item should be dispatchability. And that's been pushed at the federal level when we've had a Democrat in the office, in the White House. And then it's also been pushed for the last 20 years by more liberal regulators at the state level with their renewable portfolio standards. So, we kind of got by because demand has not been growing in the U.S. Electricity demand has been flat really since the 2000s. But in the last few years, that is now changing. So we're looking at 1% to 2% growth. And we can't rely on wind and solar, even with batteries, which only last a few hours.
Yeah.
So we're looking at increased possibilities of outages really across the country. Not even states, red states like Texas, which controls its own grid, are immune from this, and they've been infected with this kind of renewable disease, if you will. But here in New Jersey, I wrote a piece recently about our problems, and you're seeing that now with spiking electricity prices. But even in the RTOs, the regional transmission organizations that are multi-state grids, if you will, they've all had the same problem where too much reliance on wind and solar. We've shut down coal. We've replaced it with natural gas, which is good. It's a wash. But going forward, if we let this continue, we're going to have more outages. And the DOE and the NERC have both flagged this issue over the last year that we're looking at increased destabilization of our grids and more outages. And the renewable people will put a happy spin on that by calling it demand response. And they say we have to have demand response if we're going to have renewables, which is just their way of saying we have to have more scarcity and we have to turn somebody's lights off. So, we have a problem. Luckily, the Trump administration is focused on it now in the last year.
So you mentioned dispatchable energy, and I know most of the people who listen to my podcast know what that means, but in case there's someone who doesn't understand, what is dispatchable energy and why is it so necessary for the stability and reliability of the grid?
Well, you need to have power that when you call on it, it answers, right? So it's kind of a basic concept. If you want to have a reliable grid in a developed country where the entire economy is dependent on reliable electricity, then your choices are only dispatchable, right? So we have coal, we have natural gas, we have nuclear. Those are the three main sources. And I'm agnostic between all three. I think to have a diversified grid with the lowest average cost over time. You don't want to be dependent on any one particular source, because then you're exposed to problems in terms of feedstock costs or supply chains or whatnot. So we've really piled into natural gas over the last 10 to 15 years because the environmentalists wouldn't allow anything else, right? Nuclear
Yeah.
was problematic for unproven reasons dating back 50 years. Natural gas had a smaller carbon footprint, so it was better. But even natural gas now is not going to work over the long term, and they're rethinking that support. But it has to be dispatchable because in extreme events, and I'm more concerned about the winter than hot
Yeah.
weather. If the grid goes down, people will die, and we saw that in Texas 4 years ago, right? And you
Yeah.
can't have one segment of your generation mix that will not run 65% of the time. So to say that, well, during Winter Storm Uri in Texas back in 21, well, renewables weren't supposed to run in the winter because it was winter, it's just crazy. It places a disproportionate burden on the other source of power. So we have to get back to the only electricity allowed in any grid in this country has to be dispatchable.
Yeah, especially because, like you said, there's been this move over the past 10 years or so where that reliability and stability of the grid has been undermined, and there's been all of these sort of unreliable intermittent power sources like wind and solar and whatever bit of battery that's been put on there, and it's really destabilized the grid a lot. And so um, I'm just going to put your report up here, because there was this really great graph that you had, if I can, this one, where it shows this huge buildup of nuclear power from 1969 through the 1980s, and then there's this drought, this drought of nuclear, and now we're in the place where you're actually decommissioning nuclear power. And there's been a couple of these projects that have been built, and we'll talk a little bit more about the Vogel plant. But can you just give us a little bit of background? We see this nice ramp up and then the falling off, and I know a big chunk of it is because of 3 Mile Islands. But can you give us a little bit of history about what we see in this graph?
Yeah, so back in the beginning of the 60s, but in the 70s and 80s, that was the heyday of nuclear power, commercial nuclear power in the U.S. So there was a ramp up, and you can see that we were averaging 6 to 9 gigs being added of new capacity every year. And then we kind of went into this drought. The industry went dormant for more than 2 decades,
Yeah.
and there was an attempt to get back and start an energy renaissance right around the year 2000. And that really, didn't produce much. 20 years after that, so-called renaissance, we've only added 2 new reactors in the U.S. And those, as you say, were the Vogel plant in Georgia, and they were just completed in the last 2 years, right?
Yeah.
So the effort up until now, hasn't worked. But back in the 70s and 80s, the problem was that right in the middle of that building period, we had this operating incident at 3 Mile Island, and that was March of 1979, when I was a senior in high school. And everyone overreacted to it. I mean, globally, but particularly in the U.S., including the regulators, the Nuclear Regulatory Commission. And, they overreacted in terms of the safety requirements going forward. And, there were a lot of cancellations of orders for additional capacity that occurred, right after that accident. It got worse after Chernobyl in '86.
Yeah.
And then it's continued actually to the current day, because with Fukushima and that incident back in 2011, you also saw another overreaction. So, I think a lot of government officials, regulators have been really not supportive of the industry that they regulate. And they've overreacted at any excuse. I mean, in Europe, it's been worse because after Fukushima, it was used as an excuse to shut down nuclear power plants, particularly in Germany, right? So here, I think the NRC has been the worst enemy of the industry that it's supposed to be regulating. And if you look at the nuclear power plants that were built in the 70s prior to Three Mile Island. And then in the 80s, after, you can see that the cost effectively doubled and the time to complete them has also doubled. And this is the chart that kind of demonstrates that. And intuitively, I knew this was true. Getting all the data here was kind of a bear, but it's really telling about what happened. So in this chart, if you look at the orange dots, those are nuclear reactors that were completed prior to 3 Mile Island, and then the blue dots are those completed after. You can see so that the timeline extended. It took more than a decade for a lot of those that were completed in the 80s, and the price just escalated sharply.
Yeah.
Looking at Vogtle, which was an existing nuclear plant where they added 2 units back in the 80s, and then they just added the two Unit 3 and Unit 4 in the last 2 years. But the two, number 1 and number 2 that were added back in the 80s, those were at the high end of the cost spectrum, right? So, you can lay a lot of that delay and review on the NRC. And, with any infrastructure project, time is money. So if you delay that project, it's just going to add to the financing costs and ramp it up. So I think with the U.S. nuclear industry, it's an industry that's never been allowed to develop. It's never been allowed to learn. There's not been a normal learning process. If anything, it's been a negative learning process. The industry, at least the electric utilities building the reactors up until now, haven't gotten better at it. They've gotten worse, right? So we need to kind of fix that problem. And I would argue that problem continues to the current day, even post the last 2 units that were added, which is why, the paper comes up with a new proposal for how we should build going forward.
Right. Because so if you can just maybe explain a little bit, what have been the roadblocks? And, you say that this is a negative learning. How can this be overcome? Because one of the things that I noted in your report was that you were talking about non-recurring factors of the Vogtle project that drove up the cost. And now the sort of critics are trying to say they're holding up the Vogtle project as being this example of a reason why we shouldn't pursue nuclear, because it's too expensive. It's, there is always cost overruns. It always takes longer and so on. So how might future large reactor builds learn from this experience rather than saying, well, this is going to be the future will be exactly like what happened with Vogtle, where it'll always be cost overruns and always take too long?
Yeah, and there are a lot of people who have been critical of nuclear who are jumping on that bandwagon. But I would note if you look at the nuclear fleet right now, there are 94 nuclear reactors in this country. There are more than 50 commercial designs. So that's taking diversification to an extreme. And I can understand the basic concept that you don't want to be dependent on one technology. If God forbid there's a fatal flaw in that technology, you don't want to take the entire fleet down. But we were taking diversification to an extreme, and we need to get back to some standardization. If you look at those countries that have successful nuclear programs like South Korea, they just keep building the same reactor design. They get better at it. They learn from the process. There are economies of scale. So at a certain level, we need to start doing that in the US and not just say, well, what we've tried in the past hasn't worked, so let's try something completely different. And I think, and one of the reasons why I wrote the paper too, is because even though there's a lot of support for nuclear right now, it seems to be concentrated on small and modular reactors, SMRs, right?
The new shiny thing.
The new shiny thing. And I think people in the industry are fooling themselves if they think that they're going to get complete environmental buy-in just because these reactors are smaller, right?
Yeah.
At the right point, once we start building them, there's going to be backlash from the people who have never liked nuclear and are just waiting and biding their time. But we haven't built any SMRs in this country. So it's an unproven technology. We don't know if we'll save money. And if we really want to scale up generation capacity in the US for nuclear, which the Trump administration has stated that they want to, it's going to take forever if we're going to just focus on SMRs, right?
Yeah.
So, we have to get back to building 1 gigawatt or larger nuclear reactors. And we know how to build the reactor design that was used at Vogtle, which is the Westinghouse AP1000, right?
Yeah.
Georgia Power, which built those two new reactors, they went through all the pain and the learning process around it, because that was the first new reactor built in this country in the last 30 years. It was also the first to go through a new regulatory process. Again, the NRC is forever changing its approach, and that also added to the bill and the time delays. So I do think that Vogtle was de-risked the AP1000 for the rest of the industry, and that the costs that were included in those completions, which was $16,000 per kilowatt. If you go back to the other chart, you'll see that's all the way at the high end on an inflation-adjusted basis. So the most expensive units to construct ever in this country, which is why everyone is piling on saying, oh, we just can't build nuclear. It's just too expensive. We have to, stay focused on renewables. We can't build coal, natural gas, So again, it's self-serving, the criticism around Vogtle, because, people are not taking the time to actually go through it and realize that, oh yeah, a lot of what happened there is not going to happen again. With Vogtle, it's like the old vaudeville routine that Abbott and Costello had. It's like Niagara Falls. You say Vogtle and people suddenly, turn around and become, frantic about it. But if you disaggregate the data and look at exactly what happened there, it's easy to say that that's not going to happen again. So if you look at Vogtle, they were building two AP1000s, right? So they're 1.1 gigawatts each, right?
Yeah.
It was the first of its kind. It was the first to be built under the NRC's new combined operating and construction license. So the NRC thought back around 2000 that it would make things easier, rather than applying for two separate licenses, to have one combined license when you did that. So the problem with that is that every change order becomes a new rulemaking for the NRC, right? So it was a very rigid process when you had change orders. And obviously, as a first-time build, there were change orders. I mean, what we found when they tried to construct these reactors, even though they had a small compressed footprint, the constructability was constrained. It was also partly modular. So when there was a problem with a modular piece, those could not be fixed on site, right? But I think the biggest non-recurring factor we don't have to worry about going forward was that Westinghouse, which designs reactors, they have they've designed, I think, more than 60% of all the reactors currently operating in the world, right? So they are clearly expert at designing nuclear reactors. They have never built a nuclear reactor. So they're not an EPC contractor. And with the Vogtle project, it was the first time that they were basically the EPC contractor. Okay. Which,
wow.
As anyone who's ever done a home construction project, you don't want it to be a learning experience for the contractor, right? And that's what happened with Vogtle. But it actually gets worse, because Vogtle was not the only two AP1000s that were being built at the same time back during the 2010 decade. Westinghouse was also building two same size 1.1 gigawatt AP1000s for the South Carolina utility, about 100 miles away, right? So they were building four of these units for the first time simultaneously, right?
Wow.
And, I think there was a failure of due diligence all the way around, including by the sponsors, the utility sponsors, as well as the regulators, that no one put their hand up and said, hey, maybe this is, a little beyond them, right? And they're taking on too much, both operationally and financially. And, then you had the NRC also kind of changing the rules of the game as they went along. So, right before they were about to go to a final investment decision and construction start, the NRC came out and said, well, we need to change the plans because we have to make sure that the reactor shell is impervious to a commercial airstrike. And that was more than 8 years after 9/11, right? So you still have that same process of changing the rules of the game by the regulator as you go along. So that delayed it another 3 years at the front end. And then Westinghouse filed for bankruptcy because obviously they were stretched too thin, right? And that was in the middle of construction. which is always problematic. So the cost skyrocketed, and the timeline doubled basically, right? And then you had COVID at the back end, which
Yeah.
disrupted the construction process for the last couple of years, right? All of that, I would argue, is non-recurring, right? So even though both came in at $16,000 a kilowatt, still if you X out all of those non-recurring extraordinary factors, you could still build it for an overnight capital cost. And a number of groups like MIT and the DOE have estimated this in the $6,000 per kilowatt range. So there's room to add on financing costs, but you need to complete these within 5 to 6 years, right? In order to preserve the economics. It can be done in other countries. It is being done in other countries, not the UK though. And so we should be able to achieve that here, which would make my recommendation for a new sponsor coming in work. But as part of that, the regulator has to get out of the way. But what Vogel left us with was basically detailed blueprints about how to build the next AP1000. Oh, the other problem when they went to contract and final investment decision around Vogel, as well as the two South Carolinas, nobody had detailed engineering plans, right? Which is just fatal, right?
Yeah.
And to assume that you're just going to change it as you go, you're just asking for, the thing to come in over budget and beyond time delivery.
Yeah, because every change request, there's added cost, and significant added cost with change requests. Contractors love that.
Just the delay of time from, say, 5 to 10 years for the delivery doubled the financing cost.
Wow.
It added $4 billion to the price tag.
Yeah. Well, so this is for the people who are listening and can't see the chart. This is a great chart on, I think, page 19 of the report, where it's figure 9, comparative nuclear construction cost by country, and it shows what the sort of pro forma ones are, the actual cost of the Vogel plant, what the 2013 budget for it was, and then what it's compared with other countries. So South Korea, India, China all have fairly low costs. Japan has fairly low costs. France is kind of mid-range. Finland is kind of high, and the UK is almost as high as the Americans, and in some cases more, depending on at what point. But the UK system is quite similar to what you're describing, where there's all these regulatory changes as it's ongoing, and different environmental things slow things down. Like, I think Hinkley Point has been in construction for 15 years now. I don't know, it's been forever. And now they've given permission to do Sizewell C, which is basically the same as the Hinkley Point, but with these different modifications that have been added on over time. And what's so frustrating for the UK is that they're repurposing the French designs. Like, it's the French design that they've had for a long time, so it's the next iteration of the French design. But they've added all of these kind of bespoke elements for the UK geography, I suppose, I don't know, or the regulatory structure, which has added all these sort of cost overruns and projections that it's going to be very expensive. And so, of course, all the people who are saying, well, we have to have cheaper energy, they use this like Vogel to say, oh, well, maybe we shouldn't be pursuing nuclear. We should just be investing more in wind and solar. But all that aside, what's your proposal to fix this kind of financing issue? How can the United States get out of this kind of morass of, overcoming the fear and overcoming the sort of regulatory and the construction financing issues that happen with Vogel? How can the United States move forward and get this nice, reliable, dispatchable energy on the grid?
Yeah, well, just to finish your thought about the UK, I mean, at a certain level, it's not crazy to think that, building something at an extreme cost is another way to effectively, shut down any support for it going forward.
Yeah.
Kind of along the lines of Trudeau taking back the TMX pipeline and then finally completing that, but at this egregious cost.
Yeah.
Kind of, have a chilling effect on anyone wanting to push fossil fuels. So I don't think a government-led model like the UK is doing with Sizewell C works. Certainly not in Europe or the US or Canada. Um, it's different, and we should take some of these number estimates for actual costs with a grain of salt, because the government, particularly in Korea, India, and China, are very closely involved with it. But
Right.
the time deliveries are tougher to fudge. So they clearly are building them and completing them more quickly than we are, right?
Yeah.
But with Sizewell C, actually, that's going to take 9 to 12 years, and that's their estimate. I mean, that's
Yeah.
not, so it's going to probably be beyond that. And the last numbers I saw, they were like estimating that the budget was to come in at $20,000 per kW, right? So if there are overruns from that, and those are in dollar terms, to put it on the same footing with Vogel. So I think the UK model is kind of broken, but I agree with your point that it's probably because of your regulatory structure,
Yeah.
uh, which at a certain level is anti-nuclear, which is somewhat perverse. But in the U.S., what we need to do, I think, and this kind of came to me. We had our annual energy conference that the think tank sponsors, the Energy Future Forum, back in May of this year, and we had the CEO of Georgia Power, which is the sponsor of Vogel project, and she was talking on a panel about nuclear. And I remember at the end of her discussion talking about that project, she was asked by the moderator, "Do you have any plans to build any more nuclear?" And she just said, "No." And I think that is telling that the company that, again, lived through all the pain there, but learned from that process, has no plans to build another nuclear reactor. So if that's true, then it's not surprising that every other electric utility in this country also has not placed an order for an AP1000, and it's been more than a year since we completed the last one. So there's something fundamentally wrong with the traditional sponsors of nuclear reactors. And I think, as we talk about in the paper, it's because they haven't been particularly good at it. Clearly, the track record speaks for itself, right? Whether
Yeah.
that's because it's not all of their own making. The regulators played a big role in that, but they just don't have a strong track record. And they've also become more risk averse, right? So
Yeah.
unless the regulators for each of these companies is really pushing them to do nuclear and incentivizing them like they've done with renewables, frankly, then nothing's going to change, right? And so that's why we need to come up with a different approach and a different group of sponsors who will take on the construction phase, because nuclear is unique when it comes to energy infrastructure. I mean, with any infrastructure asset, it's very long lived, 75 to 100 years. And there are
Yeah.
two phases: the construction phase, and then you have the very long operating phase. With nuclear, the construction phase has much more risk, right? It's much more open ended. And if your budget gets blown out and delayed, it destroys the economics up front. So it's almost catastrophic, speculative construction risk. And so it is unique, versus other energy infrastructure assets where construction is a little more certain, right? But clearly utilities cannot handle that anymore, and the people who run utilities are not being paid to make that decision. I mean, I would point out with Vogel that they felt a fair amount of pain around that because their corporate rating was downgraded because of the financial stress from that project. They were forced to sell their Florida utility in order to raise cash to strengthen their balance sheet, right?
Right. Yeah.
So it is painful. And a lot of times if you make the wrong call and you're running one of these utilities, you're out of a job. So it has career implications. And we saw that with the South Carolina project that I mentioned, which was canceled, after Westinghouse filed. People went to jail for misleading the regulators. They clearly lost their job. And one of the sponsors there was forced to sell itself to Dominion because it was weakened so much.
Wow.
Stress from it, right?
Yeah.
But I think we just have to acknowledge that we have to get over this hesitancy to take on the financial risk and come up with a new group that can. And as we argue, I think infrastructure private equity fund managers have the expertise, they have the risk tolerance, they have the financial expertise in order to handle this. We just have to make sure it's attractive enough so that they can achieve their returns, and then they should start to move into the space.
Right. And, you mentioned the infrastructure firms. And if I remember correctly, Westinghouse, when they declared bankruptcy, they were bought out by Brookfield Infrastructure. And 51% and 49% went to Cameco, which is a uranium mining company out of Canada. And well, I guess Brookfield was in Canada at the time, but now they've moved their head office to New York. Um, but in any event, so how would that alter things? Because if they now own the Westinghouse AP 1000 and they do have this construction background, is it possible that they would end up in the kind of same situation because they would be both doing the construction and the engineering of it and so on? Or do you see this just because they own it, they can bring in their infrastructure side to actually um, do the proper construction on time, on budget?
Yeah, I think it's going to be two separate parts of Brookfield. If Brookfield does get involved with the nuclear building side and the investing, that's going to come from their funds business. Brookfield, I assume that the Westinghouse business is a portfolio company housed somewhere within the family. So they're going to need to have, a Chinese wall between those two. And they're going to have fund investors that they have a fiduciary responsibility to. So, but the fact that, and so Westinghouse that they own right now is just in the reactor design business, right?
Right.
So I think there are ways to handle whatever conflicts might develop, but there's a logic um, and a fit between, investing in it if you also have bought the reactor. And they have orders. I mean, if you look, there are 6 AP 1000s operating in the world, 2 in this country, the other 4 in China.
Yeah.
But there are 12 to 18 that are under construction or in the order book, all outside of the U.S. None in the U.S. right now, which is again the issue that we have to get around. I think Canada is looking at some of them. There should be an attraction for companies, investors that have been active in renewables, right? That are focused on sustainability goals and net zero and clean energy. Why wouldn't they like nuclear? I mean, it's dispatchable. It runs 24/7 and it has zero emissions. So I
Yeah.
think one of the arguments we make is that, infrastructure fund investors are not immune from ESG, right? And a
Yeah.
lot of them have been repurposing their energy business to call it a transition business or calling it an infrastructure business. And energy is a big piece of the infrastructure market. But, they have been very active in wind and solar and other stuff. And there's an argument that you can reallocate some of that capital towards nuclear. And certainly in the US, you would want to do that, I think, because the investing and the government support, the environment for wind and solar is taking a turn here, clearly under the Trump administration,
Yeah.
getting rid of a lot of the subsidies. There's probably going to be less opportunities to do stuff in that area. So why wouldn't you reconsider nuclear if you could address some of these other longstanding issues that you have around the industry?
Yeah, for sure. And I think what you propose, for the sort of project finance model that you're advocating for in this report is the maximizing debt and separating the construction from the operation, that this will help attract new investors and make the large nuclear reactors more viable economically. And what you just described there are kind of like these tech guys. If you want to have an AI data center, like you said, they've been investing in solar and wind to offset whatever energy, reliable energy, that they use for their actual data centers and whatnot. And so if they do that, is there specific regulatory or government support like loan guarantees that you think would be essential in the short term to sort of kickstart this private investment in nuclear?
Yeah, I think there are a lot of things that the federal government needs to do. But as you say, what we're proposing is basically just building these reactors on an asset-specific basis and financing them using project financing rather than a utilities balance sheet, right?
Okay, yeah.
With all the stress. So typically, what you saw with Vogtle, they were allowed to start including the construction costs of that construction project in their rate base from a very early date. So it's better if we come up with an asset-specific approach that completes the asset, and then if you have a utility who's going to buy it, at that point put it into rate base, right? But you don't expose, electric utility customers to that open-ended risk. And you saw in South Carolina, that project wasn't completed. It was abandoned. And still the ratepayers there are going to be paying for it into the next decade.
Wow.
$9 billion of capital sunk into the ground. And now you just have a steel hulk sitting there. So, with project financing, and this is the typical approach with large scale infrastructure assets. You do it on an asset specific basis, and that allows you to raise much more debt than if you were doing a corporate balance sheet. Because typically, you don't want to blow out your leverage ratio higher than 50-50 debt versus equity for a company. But on a project, you can take that up to 80 to 90% debt. But that only works if you can keep the cost of the debt down, right?
Right.
So again, this is all about making it attractive from a return perspective for private equity investors. So they need to minimize the equity check that they write. So keep it, say, 10% of the total capital, maximize the amount of debt, and then minimize the cost of that debt. And what we're arguing is that since this is kind of a new area in nuclear project finance, the government needs to play the role providing that cheap credit. And that's not a crazy stretch because the DOE has its loan programs office.
Yeah.
They've been providing money, under Democratic regimes, they've just been giving money away, right?
Yeah.
A lot of it's been grants to new technologies that haven't worked. And so that's money that's never been paid back. What I'm proposing is that we just, and the DOE is already doing this under Chris Wright, that the loan programs office make available a good chunk of money for some of these nuclear project financings, right?
Yeah.
And then that will make the return possible for the new sponsors. And then once they're completed, that money gets paid back. So this is not a grant or an award or an attempt to de-risk a new technology. This is proven technology. It's going to get paid back. And once the asset is completed, if it's sold or if it's kept by the private equity sponsor, you're going to be able to refinance at a more attractive rate, right? So this is not free money. I think that's an important point to make about what we're proposing because, I think once with a little push from the federal government and states as well, you can get this thing going and then it should feed on itself. And then the private markets will take over, right? So it's only kind of over the near to medium term that the federal government, the Trump administration really needs to step in and make sure the momentum starts.
Yeah, and I'm so glad that you're really emphasizing that this is a loan guarantee. It is not a subsidy because for quite often, as you point out, the money was going off like gold off the Titanic, where it's just handing things out to companies who would, be set up in order to take advantage of those subsidies and then shut down whatever after and never pay it back. So that's such a great point to make that these are loan guarantees that were something of a bit of a backstop, just to sort of help investors think that it's not going to be as risky, or maybe even it would be easier to get that kind of financing than going to the bank, which might not want to commit to those kinds of loans. I mean, is that why you're proposing that the government do this kind of support?
Yeah, I think they have to step up and help to get buy-in from the private financial markets, honestly, because again, this is new. It's a new way of approach, and you have to get everyone comfortable with the same issue. Are the regulators going to step in the way here, and are we going to see another replay of Vogel, right? Even though the argument is that they shouldn't. So the executive orders that Trump passed back in May, they all speak to some of the ancillary issues that have to be addressed. Reform of the NRC, which has to be fast-tracked, right? We need to build out a skilled labor force, industrial capacity, our ability to enrich uranium here, our fuel supply. That's a very important supply chain for this. So, the Trump administration is focused on that. They just need to fast-track everything that they're doing. And I think until the banks and other sources of financing are comfortable with the fact that things have changed, the government has to kind of lead the way, right? But again, I think it's only temporary. And the fact that we're moving into an easing cycle now, hopefully with the Fed, should lower interest rates overall, which will make it easier, I think, to finance projects like these going forward. I mean, one of the unfortunate things was that back in the 2010s, we had zero interest rates in this country, right? We really should have been building a lot of infrastructure.
Yeah.
Those using a project finance approach. We did that with LNG. Obviously, we didn't do that with nuclear or some other asset classes. But as an example, most of the LNG facilities that have been built here over the last 10 years in the U.S. Have been sponsored by private equity.
That's right. Yeah.
So, what I'm proposing for nuclear will be new for them, but the skill is fungible, right? Maybe the regulatory environment and the technology is slightly different, but it's something within their wheelhouse, right? And building an LNG facility on the Gulf Coast in the U.S., which is prone to hurricanes, companies like Cheniere, backed by Blackstone, clearly were up for that risk, right? And it was fairly binary risk. They got very lucky that it just so happened that the window of time that they were building, the first leg of Cheniere was a very calm period for hurricanes, right?
Yeah.
So, greenfield construction, large capital commitments, LNG is a good template for nuclear going forward, but it's not crazy to think that private equity would look at this. I think but getting back to the Cheniere point, that was where I was going with this. They financed that with 85%, the first 6 trains at Cheniere at Sabine Pass. They financed that, which was like $20 to $30 billion of capital, using 85% debt. And they sourced that debt from the high yield market. And they were able to do that at an average of 5% because the high yield market back in the 2010s was no longer high yield, right?
Right.
Every risk asset, zero interest rates. So they took advantage of that opportunity, right? And they were able to, they got lucky at a certain level because they didn't get a hurricane. They did get a hurricane when they built the regas facility at the same site back in 2005. That delayed them, but they got very lucky with the liquefaction, which was a bigger capital commitment. So, it's not crazy to think that they can take that expertise and look at nuclear. And the other reason why they would want to do that, away from the fact that it's zero emissions and maybe that's driving, it certainly drives a lot of private equity firms because they're all publicly listed. So they're exposed to the same pressure from ESG activists like everybody else. But the investable universe, if you're an infrastructure investor, is somewhat constrained because, these are assets that are 75 to 100 years. You're committing capital for a very long period of time. You can see most of the established players like GIP or Blackstone or Brookfield or Macquarie, they focus on the OECD countries. It's developed countries because they know from an economic and political perspective, you've got that foundation. There's a hesitancy to go to the emerging markets to do infrastructure investing, not surprisingly, because you have to worry about everything changing during the next election, right? And obviously Latin America, since the time I was involved in emerging markets 30 years ago, has shifted sharply to the left. And so there's a concentration of capital in the OECD countries, right? For one. So you're going to have to, think of other ways to achieve your returns. And there's also a lot of capital chasing infrastructure these days. So a lot of the established fund managers are moving out the risk curve, right? Because, everybody going after, core lower risk assets that are operating, they're getting, single digit returns, right? If you want to achieve 20% or north typical private equity returns, then you're going to have to take some risk in a thoughtful manner. And I would argue that nuclear would tick off a lot of those boxes.
Yeah, I recall, I think it was about 18 months ago where Larry Fink from BlackRock was talking quite effusively about infrastructure investments and how infrastructure is the future. I think it was in one of his annual letters where that's where he sees the direction of everything going. And when I think of the different pension plans around the world, from the Western world, they're also looking to invest in infrastructure. Now, I think maybe, would their shareholders want to support nuclear power? And but I think if there's that kind of return available, then then that might be something feasible. But one of the charts that I had up here, and I'll just put it up again, this is figure 8 in your report, where it talks about the cash balances at the leading technology companies, because you suggest that these tech companies would be prime candidates to put some of their money in as investors for nuclear energy, because they're going to need it for their own data centers, their AI, whatever it is that they use so much power for, and that they would be good candidates. So it seems like you're saying that these infrastructure companies, the large institutional investors, this would be great for them, but also for this type of private equity from the tech companies. Can you explore a little bit more about what you would see the tech companies participating in this, how they would do that?
Yeah, so the previous chart you had just showing how much capital is available to infrastructure fund managers. You can see the orange bars are dry powder. So that's capital that's been raised but hasn't been deployed. And you can see that that number is ticking up to the point I made before, that the investable universe is somewhat constrained and there are fewer opportunities, right? So that is in the $300 to $400 billion range for dry powder. A lot of these fund managers also have raised co-investment vehicles where they can get additional capital from some of their limited partner investors in their main fund, right? And that number was over 100 billion that's been raised over the last decade. So they have that body of capital that they can call on. But also, if you look at the tech companies who are the ones building the data centers, right? So they need the 24/7 power that nuclear provides. They have been warming up over the past year to nuclear, even before the Trump administration. So you see that they're signing PPAs to restart some of our mothballed nuclear power plants in the U.S., right?
Yeah.
Not to directly provide energy to a facility of theirs, but to provide nuclear power back to the grid to stabilize the grid, right? Which I agree, that is the way to do it. I don't think we want to have a bifurcated grid where data centers have reliable 24/7 power and the rest of us are like Mad Max, dependent on intermittent and solar, and we have to fend for ourselves, right? So I think everything needs to be put into the grid, and all of the longstanding issues around the grid need to be addressed finally. But with the tech companies, they clearly are supportive of nuclear. Some of them have already invested with some sponsors of SMRs. Again, I think SMRs is just a science project at this point, right? But they have shown that they're willing to put their capital up. So there's a logic to them also co-investing with some of the sponsors of these large-scale nuclear reactors. And if you look at this shows the Magnificent Seven, but the tech industry has always been very liquid. They run very liquid balance sheets. They always have a lot of cash on hand. And you can see that even just for the top 7, it was close to $500 billion. Right?
Yeah, that's crazy.
So that is capital, I think, that logically could be co-investing alongside some of these private equity sponsors from the financial industry. So I think there's plenty of capital out there that should be supportive of this, right? Again, if we address all of the historical issues around why nuclear construction hasn't worked in the past.
So, I'm wondering, is the AP1000 reactor by Westinghouse the only solution out there? Are there other nuclear designs that could be brought online as quickly in the United States? Or is that basically the large one that companies should go with?
I'm a firm believer in build what you know, and we clearly know how to do that, and it has been de-risked. We haven't built anything else in the current generation large-scale reactors. There are approved designs, but again, that potentially would be another learning process, depending on how the NRC would handle it, right? So that's kind of open-ended risk. I think if we want to attract a new sponsor and get everyone on board, we have to minimize as much risk as possible. So I think that involves going with what we know, right? And the AP1000, as I said before, the order book is building for Westinghouse. I think there are more contractors who will be able to build it. We need to rebuild our industry here in the U.S., but clearly it's active overseas. And so I think there's an argument that that is the least risky of it. But I'm agnostic about design down the road, but I think we should acknowledge that building something for the first time in the nuclear space, you're potentially looking at it more than a 10-year process, which the UK is living through right now. I mean, Hinkley's not even done. It's not going to be done till the end of this decade. And
Yeah.
I would take the over on Sizewell, and that could be, more than 12 years. So we just really need to do and we have to compress the time because the
Yeah.
economics are dependent on that.
Okay, so to sort of wrap up here, because I'm so grateful that you're taking so much time out of your busy day to speak with me. If we're looking ahead to 2050, what do you think a successful American nuclear revival looks like in terms of capacity added, energy mixed? What do you think the future holds?
Well, I think the goal that the Trump administration set, of quadrupling our capacity in 25 years, that's a stretch goal, obviously. I don't think we're going to hit that, but we should start shooting for it, right? And I think it's very good that we are having this discussion about nuclear and grid reliability. Nuclear has been punching above its weight, ever since, it was brought online. It's like 8% of capacity. It's close to 20% of generation. And it's always there. And the operating incidents have been overblown,
Yeah.
including a 3 Mile. Fukushima was a tsunami at the end of the day. Chernobyl, if we're going to extrapolate out from the Soviet Union in terms of operating standards, then you would shut the entire industry down, right?
Yeah.
So we have to get over the overreaction, which is fed by environmentalists who have never liked nuclear, right?
Yeah.
Or large scale energy to begin with. I mean, hydroelectric in Canada used to be also in the same category when Hydro-Quebec was going through its capacity expansion back then. So they just don't like energy, I think, generally, unless it's variable. So, but I think we need to get started, right? So we need to develop an order book. I think if we can get 5 to 10 AP1000s up, at least committed to in the U.S., if the DOE can, basically quickly say we're going to provide, probably $5 to $6 billion each. I mean, that's what it's going to cost, I think, to build them. And they can easily create that room for that capital within their current budget.
Yeah.
And then fast track the siting, right? The DOE in June came out with a report that identified those existing nuclear plants in this country, and there are 21, that could handle another AP1000 1.1 gigawatt reactor, right? And they also identified a number of coal plants, a lot of which have been mothballed, which have connections to transmission, which also could handle an AP1000. And those number actually in the 84 range, right? So we fast track those sites and do whatever we can to get the process going. I think the Trump administration, probably President Trump in particular, should make the pitch to Wall Street, honestly, to get the ball rolling, right? To convince people that now is different, because I think it can be, but I think he needs to get behind it and push this concept and not assume that the market will gravitate towards it. Again, nuclear has, longstanding issues around, I'm not going to say taint, but clearly people have viewed it differently. And I think, it needs to be a full court press from the federal government now, in terms of getting the first projects up and running. And then, with good execution, if we can complete these things on time and on budget, if you could turn them over to a utility buyer at an attractive price, which I would say is, in the report, we say you can do it and still make your return at $7,500 a kilowatt. Even if that slips a little, anything, frankly, under $10,000 per kilowatt, I think is a win for utilities, right? It still works if you look at the economics over 80 years of operating life. So, but I think the Trump administration needs to own this and make the pitch personally and identify those projects. Eventually, the private market will step in and take over. But at least, over the next 5+ years, it's going to be on the federal government to kind of get the momentum started.
Yeah, for sure. Because I think, like you say, the people who would finance this need to have some confidence. And if the president comes and speaks out and approaches Wall Street, that's confidence building. But I wonder if, do you think that, let's say, the Democrats get back in power in 2028 or maybe 2032, and the investors have made commitments to build, but it takes, 5 to 6 years to build. Do you think the rug could be pulled out from this? Or do you think Democrats would also support having reliable nuclear, clean energy for the grid?
Um, well, you can never say never when it comes to Democrats, but they at least, even during the waning days of the Biden administration, they were, being supportive of nuclear, right? If you look, and I think they were open to allocating some of the LPO funds towards nuclear. A lot of that was, just focus on SMRs. Um, but I think it would be much more difficult. And also, I mean, Vogtle was completed during the Biden administration, right?
Yeah.
So, I think it's much different, you know, having Congress like rethink the subsidies and passing the One Big Beautiful Bill Act that strips that away, not quickly enough, I would argue, from wind and solar, from a nuclear power project that's up and running, that's been permitted and everything. So that's another argument to move more quickly for the Trump administration. But I think it'll be tough for even Democrats to go back on nuclear because it's supportive of their goal, right? I don't think climate should be a policy goal, and it looks like we're getting away from that in the U.S. with the endangerment finding being repealed. But if you care about that kind of thing, then you should be supporting nuclear, right?
Yeah.
So there's an argument that they wouldn't backtrack on that. But back to your point about Larry Fink and infrastructure, every category of infrastructure, particularly with regard to energy, is supportive of the overall economy. It drives GDP growth.
Yeah.
It's a very stable asset, contracted revenues, and that's why it's become a very attractive investment strategy over the last 25 years. So, a lot of these firms, GIP is now owned by BlackRock. They bought them within the last year. That's why they're touting infrastructure. It's one bucket within their overall asset profile that they were not able to build organically. So they went out and bought the biggest and arguably the best infrastructure fund manager in GIP. And now they've kind of rationalized everything they have internally. So now they are a player. But it is an attractive asset category, right? And it's strategically important. I mean, if you remember the whole, a few months ago, the whole focus on the Panama Canal.
Yeah.
BlackRock through GIP buying the two port terminals there as part of a big portfolio from Hutchinson Whampoa. I mean, it is strategically important. I mean, we should be thinking about who owns our energy infrastructure because these are national security issues. And that goes to nuclear power plants. I'm shocked that I think the Chinese still have a stake in Hinkley, if I'm not mistaken. And
yeah, I'm not sure. I know that there was lots of talk when the Conservatives were in power to have the Chinese divest from that investment. So I'm not quite sure. I haven't looked into it recently on who the shareholders are. But that they were there at a time.
They've been pushed out of Sizewell, I know. But I don't think it's any great shakes that the UK government is the lead sponsor. But we should be thoughtful about who owns our infrastructure because they are strategically important. When I taught at NYU, my infrastructure finance course, they had a program at Stern where a lot of military people got their MBA degrees, right? So we had a lot of ex-military or current military taking my course, and they would always get the right answer. It's like, if a war breaks out and you start bombing things, what's the first thing you bomb? And it's like, okay, economic infrastructure, right?
Yeah,
your power grid,
for sure.
Your bridges, even before you start going after the other army, that's what you do. So that just confirms the fact that it's critical. And there's a reason why we don't want to have the Chinese running our ports because they have cameras so they can see what's going in and out. And we knew this 20 years ago when we prevented Dubai from buying one of our port portfolios. We've kind of forgotten that recently, and Europe, I think, has forgotten it. But I would argue that financial investors like BlackRock and that, even though they clearly skew liberal, are not a strategic concern in terms of owning these assets, because they do have the check that they're in it to make money, and they have that fiduciary responsibility, even though they garble it a lot with their sustainability talk. So that's a check on them. So I would much prefer to have GIP building nuclear power plants in this country and maybe owning them over the long term if they don't sell it outright, than having foreign companies come in and sponsor.
Yeah, good point. That is an excellent point to end it on. Energy security and national security being intertwined, absolutely, with infrastructure. So, where can people find you? Where can they find your work?
You can look on LinkedIn or Twitter. I post a lot of stuff up there. I'm still working on getting my website, which will pull it all together. So that is under construction, if you will. But you can reach me at the National Center for Energy Analytics through my email there. That's probably the easiest way.
Okay, excellent. I will put all those links in the description. And Paul, I want to thank you so much for taking the time to talk with me today. Thank you.
Thanks, Tammy. Great talking to you.